Okay, looks like everybody's here. Let's go ahead and get started. My name is Matthew Wilson, the founder of Life Matters. We're talking about the most exciting topic you could think of, and that is insurance. No, I'm just kidding. But I'm going to try and make it exciting for you. This is a fully loaded policy. Insurance is one of those things. We don't necessarily want to have it, but we have to have it. Okay, so something happens to you, especially if you have a mortgage. What happens to your family? What happens to your wife, your children, or your spouse, significant other, partner? We're going to talk about all this today and how you can get maximum benefit, maximum coverage for a net zero cost. That's exactly right. Fully loaded, have tons of benefits at the end of 25 years or 30 years, whatever you put down on the policy. You can have a net zero cost for the whole thing. So that's why I'm calling it the fully loaded policy. It's fantastic. I'm really excited. In order to do this, though, a couple of provisions. Now, I'm not an attorney. I'm an agent. I'm a field underwriter. That's my job. But a couple of assumptions that I have to make in order to do this is, number one is I'm going to assume that this is a $300,000 home, okay? Now, I don't know if your home is more or less than that. It's okay. Just understand the principles. I'm going to make some assumptions here about age and spouse and health and all that stuff. Don't worry if it doesn't match up exactly with your life, because these are principles I'm going to show you, and this is modifiable to anybody's situation. So the first assumption is that we're going to talk about a $300,000 mortgage. That's about the average in Arizona, okay? So it could be more, it could be less, but we're going to go for purposes of illustration, $300,000, and this is a 25-year term. So I'm going to put that over here, 25 years of a term policy. I'm going to explain why 25 and not 20 or 30 like most policies have. I'll explain that in a minute. Next assumption, we have spouse number one, 40 years old. Spouse number two. You like my stick figures? Those are fantastic, aren't they? 38. We're going to assume that these two spouses are very healthy, okay? You don't have to have perfect health in order to qualify for this, but there are some health qualifications that you must pass. This policy, what I'm going to show you, this plan is not for everyone. Okay, it's a little bit more expensive than the average plan, but what you get out of it, all the benefits that you get from this plan far outweigh what you could get with just a regular policy. So I'm going to explain how this all works, but for now, 40, 38, you might be younger, you might be older, it's okay. For purposes of illustration, we're going with that. And so what happens? You get a home, right, and it looks like this. So this is a 0 on up to 30 years. Is usually about what most people get on their mortgage. It's a 30-year term. A lot of people are getting 4% interest rate, right? We're going to assume that. It's going to be 4, it's going to be 4, you're right around 4% interest rate. But what happens on this plan is the goal is to get you, your spouse, your family, your children, so you've got a whole bunch of people here. If you have children, right? That's three-legged. Sorry. Just driving fast. This is a policy to protect them in case something happens to the breadwinner, one of you or both of you, okay? So we're starting out here, you have the most debt, you got a ton of debt, and over here you have the least amount of debt because you end up paying off your mortgage, okay? Assuming you stay in the home. And if you don't, we'll talk about that too. But there's all kinds of things that life could throw at you all along the way, right? This black rain cloud called cancer, called job loss, called a heart attack, some health conditions that can happen to you. There's all kinds of things throughout your journey to get to here that could happen and cause you and your family to be at risk, financially exposed in some way. Okay, so we want to put in a policy right here, a fully loaded policy that no matter what happens to you on this journey to have a debt-free home, no matter what happens to you, no matter what life throws at you, you're ready for it. Okay, how much peace of mind would that give you if you knew that you had a policy in place that is a win-win? You can only win with this policy, and I'll show you what I mean by that. So here we go. We're going 25 years. Okay, so keep that in mind. This is a 25-year policy, so we end right here. There's this little section here I'm going to talk about in a few minutes, the rest of your debt. Okay, so we're going to take you for 25 years. Here's why. This plan that we put in place has what's called a cash back option. I'm sure you may have heard of it. Some people haven't, but you may not know you can get all of your premiums paid back to you in a certain period of time. In this case, we're going to say 25 years. Okay, hold that thought. Now, 40-year-old. Okay, 40-year-old. We're going to say this person is a male, and we're going to say they have $250,000 of coverage. Okay, that's the insurance policy, right? And we're going to say the 38-year-old is a female, and we're going to say she gets $100,000. Now, you're wondering why. First of all, it's a huge misnomer in the mortgage protection industry that you have to protect the full $300,000. It's not true. I'll be happy to explain that, but it's another time, another conversation. You don't have to protect the entire amount of the mortgage in order for mortgage protection to do its job. But for purposes of this illustration, and I'll show you why in a second, the reason why we pick these numbers is because there's something that's going to happen. It's going to all tie in here with your mortgage. So $100,000, the cost for that for a healthy female is $75.08 a month. And the cost for this for a healthy male is, what do we got? $184.58. Those are monthly costs. Now, first thing you're thinking, I've seen the ads on my feed. I've seen the flyers in the mail. I can get a huge amount of life insurance for $30, $40 a month. And it may be true, but it doesn't have what this has in it. So please don't compare apples to oranges. This is a whole different beast. And here's why. You're going to pay $184.58 per month and $75.08 per month, totaling, okay, what do we got here? The total is, I have my notes here, sorry about that. Here it is. So the total you're going to be paying per month is $259.66. Okay. I could have just whipped out a calculator, I guess, but add those up. If you have the 40-year-old male and a 30-year-old female, that's what it's going to be the monthly. Why is that significant? $259.66 times 25 years totals $77,898. $77,898. Okay, that's the check that this insurance company is going to write to you because you lived long and you were healthy. Now that's the likely scenario. Most people are not going to die in the next 25 years. Most people. Some will, some won't. We don't know what's going to happen to you. Obviously, if we did, we'd be able to write the perfect life insurance policy for you. But since we don't, we need to protect anything that life might throw at you. So if you're one of the many, one of the most, who will outlive your policy at 25 years, you're going to get a check at $77,898 for that, okay? Now, what does that mean? What happens right here? Now, notice, I showed you this little box right here. This is about $77,000 left on your mortgage. What are we seeing here? Oh, my goodness. What are we seeing here? So, after 25 years, you're going to get a check back the amount of your mortgage payoff. So you can pay off your home in 25 years. So you're going to get coverage, you're going to get life insurance coverage for 25 years and be able to pay your home 5 years earlier. Now remember, you were thinking to yourself, gosh, I could get coverage for a lot less than that. But does your life insurance coverage allow you to get out of your home 5 years earlier? Do you know how much interest you save? $33,080. Nope, 26. So about 26 to 30, let's say 25 to 30. Because it depends on your interest rate. You're going to be paying another $25,000 to $30,000 on your interest right through here. You're going to save that money because you're going to have this and you're going to pay it off early. Okay, do you see that? Now, let's talk about the benefits of the policy because I told you this is a net zero cost policy. So you're going to pay, you get coverage, and at the end you're going to get it all back, which means you actually didn't end up paying anything. You just have to be okay with paying out during the process only to get it back at a future date. Now, it's not an investment, so don't think there's growth or there's interest or stock market tie-ins or anything like that. I don't want to misrepresent or confuse. This is a dollar for dollar payback, tax-free, okay, which is better than what we can say about your 401k. If you try and draw out earlier, there's penalties, right? And there's taxes, and there's all kinds of things that can add up and make it much smaller than it was when you had it in the account. Well, this comes back dollar for dollar because it's life insurance. Life insurance is tax-free, so you're going to get back the $77,000 after 25 years. You're going to be able to pay off your home early, 5 years early, but throughout the process, guess what happens? Now, these are some of the benefits. So you have a death benefit, $250,000, $100,000. This person dies, it's $250,000 payout. This person dies, it's $100,000 payout, okay? So you have the death benefit. You also have what's called living benefits. Oh my gosh, this is amazing. So living benefits. What that means is, let's say you don't die. Let's say that you get cancer. Half of men, a third of women are getting cancer nowadays. So they go and they get chemo and they get radiation. They can't work. Something happens like that. It's a major life event. So is a heart attack. So is a stroke. So is ALS. So is a major organ transplant. The list goes on. If you get a chronic illness, a critical illness, a terminal illness, anything like that, you can access your $250 or your $100 while you're still alive. So the death benefit pays out if you die. A living benefit can pay you money while you're still alive from a disease that didn't kill you, that you survived. Okay? The payout depends on the size of the disease and how much it affects or impacts your life expectancy. But there's a living benefit built into this. There is also a 25% accidental death benefit. What that means is, if this person dies at $100,000 by accident, it doesn't pay out $100,000. It pays out $125,000. So there's an extra bonus if you were to die by an accident, a car accident, plane accident, fall off a building, get struck by lightning, a drowning, any way that's not natural like that, that's an accident related, 25%. So add 25% to each of those. That's an extra benefit built into this. Okay? What else are we talking about? There's riders. You know what riders are? In the insurance world, a rider is simply an addendum or an enhancement, rather, to your policy that you can add. There's a children's term rider. There's a disability income rider. There's a waiver of premium rider. There's all these little goodies you can put in there. If something happens to you, you get disability income, or you get you can have your premiums waivered. You can have an income term rider that helps with income replacement. There's all different kinds of enhancements you can add. So riders are enhancements we can put into this policy. What else does it have in it? Non-medical. This is huge. Do you know what the MIB is? Have you heard of it? If not, stop right now. Go to MIB.com. It's not for Men in Black. It stands for Medical Information Bureau. The Medical Information Bureau is public record to all the insurance companies of your personal health records, not your records, your lab results. So when you go fully underwritten on a life insurance product, you get blood work and you have a urine sample and all that, right? They take all that data on you and they create a database and they put it into the Medical Information Bureau, where all the insurance companies have access to that now. So people who don't want to be public, people who want to be private with their information, especially in today's world where information overload and people know everything about us, right? With geo-targeting and ads following us around and all that, a lot of people are uncomfortable with giving out too much of their personal information. Well, what about your health information? You see, if you apply for a loan, they're going to check your health credit to make sure your credit is good. If you apply for a life insurance, they're going to check your MIB. Every insurance company will do that. If you go fully underwritten, you'll get an MIB hit. They will find out everything there is about you that they need to know in order to rate your policy up a few notches. It becomes more expensive, or you can actually become uninsurable. So a non-medical policy keeps all your information private. Very, very important to note, because a lot of life insurance agents don't explain the difference. They go in with really low rates on a fully underwritten product. They put their clients at risk, and then the estimates come back higher, and you get frustrated because you thought it was going to be $30 a month, and it ends up being $130 a month. So we have bypassed all of that. This is an accept or decline only. If you apply for this, you're either going to get accepted or declined. There is no rating, there's no scale, there's no tables where come back where they'll accept it, but it's going to be twice as much or anything like that. if you're fairly healthy and you might have a few medical conditions or things like that, I can help assess that. I'm a field underwriter. I can see what would help you qualify or not qualify. If you're fairly healthy, you can qualify for this. Most people can. So non-medical, very, very important to keep your information private. And of course, the best thing here is that it protects your home, right, and your family against loss. Now, if I were to tell you what's the number one thing for reason for foreclosures, it's some kind of health tragedy that happens, like cancer, heart attack, stroke. Something happens. The breadwinner is not able to go to work, and they have to foreclose on the home. The family goes out. You've probably seen some of these fundraisers on the side of the road, a car wash, a GoFundMe account, people trying to help raise money for people who are in a bind. Well, that's exactly what's going on here, is people don't have a policy like this in place, so they need to draw sources from their survivors, which kind of creates an inconvenient mess. I mean, we're always happy to help, and I always feel bad and want to help anybody who's in that situation, but it can be avoided, okay? Part of the cost of living is life insurance and protecting yourself, especially if you have a family and or a mortgage. So you're probably putting away some money in a savings account. You're probably paying a little extra on your mortgage. What I'm saying is take those extra amounts and put them into a policy with these types of premiums because of what it includes, okay? It includes so much. You pay off your home early. You avoid $25,000 or $30,000 worth of interest payments that you're going to make 5 years sooner. Plus, during the whole journey, you have all these benefits. They're huge living benefits, accidental death, the additional riders that we can add into it, non-medical policy, the living benefits, the death benefits. All this stuff is built in, so you are safe until your home is paid off. Now, let me press pause right now there because I only have a few moments left, and I want to get to some of the questions. I can see questions coming in here, so let me get to that. Okay, first one. Let me look on here. Okay, so what if I don't stay in my home all 30 years? That's a fantastic question. So basically, if most people, they're going to move around from home to home. You may or may not end up 30 years. That's okay. This policy, unlike yours at work, this policy you own outright. Okay, this is yours. You take it from home to home, from loan to loan, and from state to state. Wherever you go, it goes. So it just continues to apply to the next home and the next loan. Okay. Now, if it messes up the timeline, we talk about those specifics, but every case is a little bit different. But the principles that I'm talking about here apply no matter where you go or what you do because you own the policy outright. Next question. Do you have any other plans besides this one? Great question. Absolutely. As a life insurance agent, a field underwriter, I am independent. I'm an independent broker. I'm contracted with 10 or 15 different insurance companies. I have some that are very inexpensive. I have some that are family plans. I have great plans for younger people, for older people, whole life, term life, the whole gamut. This one just happens to be kind of what I call the bomb, the fully loaded policy. So I wanted to just talk about this one, but yes, I have tons and tons about this. Is not for everybody. Some people don't want to participate in all these benefits. They'd rather just get something very basic and pay a lot less, and that's fine too. But I love this one because of what it has in it. So next question, how hard is it to qualify? Thank you, great question. I touched on that a little bit. It's not that difficult to qualify. I'm a field underwriter. I can help you understand what you can and can't, what will disqualify you or not. So if we meet for 15 or 20 minutes, I can usually make that determination with pretty good degree of accuracy. How long is the approval process? I would say 3 to 5 days, anywhere from even immediately. I've had some of them where they come back, it's an immediate approval right there in the home. So you really don't have to wait long. There's no nurse that comes out and draws blood. There's no reports that the insurance company has to solicit from the doctor that slows everything down. The fully underwritten medical process can take 6 or 8 weeks. This one we're talking a matter of inside of a week in most cases. So great question. Thank you very much. And then what if I'm paying my home faster than 30 years? So if you're on a track already to pay your home in 20 years, then we just line this up with a 15-year policy and your home gets paid off in 20. There's still that 5-year gap that we can create with paid off even earlier. So if you're going to plan on paying it off in 20, we can make it 15, right? You just keep subtracting out 5 years off of the life of your loan, and we just pay it off earlier. Or if you happen to have your home paid off earlier, shoot, what are you going to do with that $77,000? Maybe your kids need college money at that point. Maybe you roll it into a permanent life insurance policy to take you through all the way up until you die, that you own outright. You don't even have to make payments on anymore. Maybe you take that and you take some of that money and go on a little trip. Maybe it helps pay for Christmas or any number of things. This is your money. You can do what you want with it. It does not go to your mortgage company. It goes to you, and you get to do what you want with it. I recommend on this plan, pay off your mortgage with it, but if you did a really good job paying it off early, like you were asking, then it's yours to do what you want. I've got to wrap it up. I see there's a few more questions. I promise this would only take 20 minutes. If you are moderately interested in learning more about this policy, and you see that there's a way that it could apply to you, or you want to see how these numbers apply in your specific situation, maybe you're a little bit older, younger, you don't need this much coverage, maybe your home's only $250, I can come in and do a customized quote to see what it would work with your specific situation. So just simply fill out the form below. I'm not sure if it's wherever the form is. Write your name and your phone number, put all that in there. I will be in touch. I am not a fly-by-night agent. I live here in the valley in Arizona. I'm servicing Arizona, so you will visit with me personally. I will call you. We will schedule a time. I will drive to your home, and we will look this up and see how this works for you and explore this and or any number of other plans that help give you the coverage that you need so you don't lose your home and put your family at risk if something were to happen to you. Anyways, thank you so much for listening, and I look forward to connecting. Go ahead and fill out the form, and I'll be in touch.